Yo, welcome back to another streams. Just gonna be waiting for a couple more people to join up and then we'll get started, yeah? Sup. Yeah, starting in about 5 minutes, guys. Is the music too loud, guys? Or can you guys hear me alright? Sounds good. Welcome, everybody who's joining. Welcome to the streams. There's 16 people already. Yeah, I got home not too long ago. Ooh, it's a little bit laggy again. I need a better computer for this. Like, how do you have so many things open and still have everything running smoothly? It's so hard. But it's alright. It's enough to do the breakdown, right? Jacob's in here as well. Welcome, Jacob. Yeah, just about 2 minutes, guys. Like up the streams as well. If you're enjoying the content so far. There has been no content, so I don't blame you if you don't like it right now. Making coffee, yeah. We'll be back in about a minute because we're going to be starting soon. Maui, if you're in the YouTube chat, you should have access to the Zoom because you're in the EvolutionDVS channel. I don't know if you heard me, Maui, but yeah, Zoom link's there. Cool, guys. I'm just gonna get started. So welcome back to another day of analysis. Obviously, gold is pushing, right? It's been pushing quite aggressively. So monthly, again, 2 lines. First line around here, second line down at these areas, right? Came down, made a decision. Flipping up, you're looking to fill the rest of the range up, right? You could say you already filled up to here, so congratulations, you could have filled this range, but we potentially could start coming up to these ranges as well, and we'll see these on the weekly and the daily. But you filled, I would say, the main part of the range. You're at the very top of this range, right? In terms of a closure, right? Your wick could be anywhere, but you filled the range, so you could make some sort of decision around these areas, right? Because you're tapping the top of the range. You're likely to find some sort of resistance every time you tap this area. had some sort of rejection, right? Oh, that's a very bad one, but some rejections. You had some rejections. You had a fake out. Then you had some respecting as well, right? So this was respecting here. So all of these are respecting. So now that we're at 1976, I'm expecting some sort of bottom wick if we want to continue driving up. If not, right, that's also fine. But then we're just going to be looking for those bullish buys to continue up. But understanding that because you're tapping this area, there's a high chance price will start rejecting. So we're just going to see this on the weekly, right? Weekly bottom wick already made, so any given point just going to start driving, right? Where's the top of the weekly range? Ask yourself that. We broke back into here, right? So if we move this line down to here, we broke into this range even though no top wick. So any given point you could flip and start coming down. This could just be the top wick, you know, for the monthly or for this week, and then we could start re-breaking the lows to come back down. But with what it's looking like, you're breaking through so many ranges, it seems like you're just going to start pushing up, right? Similar to this move here, right? You just pushed up, similar to these moves here. We just came up, you tapped these levels. So next kind of level on the weekly that you're expecting to tap is, I would say, around these areas. You had more rejections around here, right, at 2022, and then above that, right, you have some wicks around here, which we don't really know in terms of levels right now, but we'll be able to analyze that later on. But understand that you're also looking to fill these ranges here. So here, and then I would say potentially I'll put it here, because you know you have wicks tapping these areas as well. Every time you break into here, you fill the range. You know, here you faked out, no top wick, right? So any given point comes back down, broke above with a top wick, filled, top wick, filled, right? So once you take a breakout, once you see a breakout above 92 on the weekly, cool, we're expecting it to come up to at least 2038. But that hasn't happened yet, right? Gold is still pushing slowly, but we're understanding that, you know, it's breaking through so many ranges, it's bullish, it's difficult to take sells. Even though we're at a decision level, it's difficult to take those sells. Let's jump on the daily, right? Daily is going to start closing where? Potentially we're respecting this, right? But there's still a little bit of range left for us to drive between 1972 or 1974 where we are now up to 1980. That's another 60 pips, right? I would say you do have range, unless, you know, your top of the range is literally like here, right? If this is your top of the range, then cool, you filled it. But generally we'll have to look on the smaller time frames to see what that was in terms of the level. But I'm pretty happy with 1980, 1981 sort of areas as my rejection area for now, right? So cool, right? We basically didn't have a bottom wick for the daily, didn't have a bottom wick for the previous daily, so it just shows how bullish we were, right? So now that you've come and tapped these sorts of areas, what can we start looking for? We can start looking for potential sells to come down and potential buys if we start breaking out and continuing upwards, right? But I would say, you know, last time you broke above this range here on the daily, you can put it up here, right? You broke above with the top wick. Every single time you fill the range, right? You fill the range up to here, fill the range up to, for these ones you fill the ranges back up, these ones up, and you tap these areas, right? So I'm going to go into the 4 hour real quick just to kind of see every time you broke above, where did it tap, right? I'm looking at, this is a pretty strong level right here, exactly where we have it. It's not a bad level, guys. In fact, I'm going to keep the level exactly at 1981.35. So in that case, right, we haven't touched the top of the range. We still have like around, I would say, 30 something pips to go. Any given point, right, price can start coming down because you're understanding that this 4 hour has no top wick, right? Could see a flip and then, you know, drive down. This could be liquidity for us to start driving down, right? And if that is the case, we'll be looking for sells in this range here to start coming down, because we need to fill the range first, which we still haven't done. Once you fill the range, you know, for example, you fill the range here, you're showing signs of bearish movement, you start coming up, breaking the highs, coming down, right? So I'm looking for potential sells around here. What does this look like in terms of this? I'll move this slightly lower, I think. Cool, I will have a sell level here, but it's dependent, right? It's dependent on if something like this happens. This happens, right? You've come down, right? If you look at this on the smaller time frame, just look at it on the higher time frame for now, right? Higher time frame for now, you wicked up, right? No top wick on the next 4 hour, started coming down, breaking these lows, right? Breaking the lows every single time. So you're indicating, even on the higher time frame, right? You're breaking the lows. So in the short term, it should be coming down, right? And this next candle was also a bearish candle, respecting, you know, whatever this was. And then you suddenly got a massive push up with no bottom wicks. We'll be looking for those sells around here to start coming down. And I don't know what this is in terms of stop loss. So this is only 40 something pips. Your stop loss would likely be around the top of like 1992 sorts of areas. But these are the kind of sells I'm looking for if this sort of structure prints, right? If this structure doesn't print, it's difficult to take anything in these sorts of areas. And instead, we could be looking for some breakout buys, right? What do those look like? I'll be looking for potentially above here, right? If we get a breakout above here, I would say I would look for a buy. So understand that 1983, taking a sell trampoline does not apply, right? If anybody understands the trampoline, it's one that I've been explaining for the last couple of weeks or days. I don't know how long I've been streaming, but trampolines do not apply here because we're so bullish, right? Any given point you could start by breaking above and start jumping all the way up, right? But I'm understanding every time you get a closure above here, right? Closure here, you had a closure above here, right? You respected here, started going back up, closure here, you know, closure here, you tapped here as well, right? Closure here, just started shooting up, right? Even these areas, every time you get a closure above, you started pushing up. So in that case, right, I mean, you could get them potentially above here as well, above like 87, but cool. I'm looking for buys in general around 87 to 89 areas, right? Understanding that every time it does, it fills, and my advantage point is probably this next range up to here. So 92 is not bad, I would say. I'd say you're likely to tap 94, but on the safe side, I'm gonna put it right about. Just put it here. I mean, this is still 20 pips, right? 20 pips is not bad for a position and like a stops to break even, right? And you can close 50%, do whatever you want. I'm actually gonna move this down slightly, so it's around here. But yeah, cool. So that gives you a nearly 40 pip, 30 something pip advantage point, right? So that's pretty good. Cool, I'm gonna delete these. So those are my sells and my buys above, right? In terms of can we get buys to continue up to these levels? Maybe, right? Let's look at where the 4 hour is currently. 4 hours gonna close like this. What is this respecting? What is this rejecting off of, right? I'm gonna put a level here. You're breaking, I would say you're respecting, right? You're respecting this area. Very strong level right here. So in that case, you might not see price shoot all the way up, but if it does, right, and you're respecting the 4 hour here, like for example in these areas, right, you're respecting, and then you're showing that you want to come down, top wicks around these sorts of areas, 1983, it's pretty good, right? What else can I see? In terms of these, all these wick rejections, right? You obviously got a closure around here, so taking a sell right off around like 1974 does not work because you're basically there. You would need that top wick towards around 1983. You're respecting at these areas, but you drove down from 1983. Here, you respected, came up, grabbed liquidity, 1981, start coming down. So I would say your zone is around 81 to 83, which is fine, right? In terms of buys to go back up, right? I would need a closure above on the 4 hour, above 74 first. So understanding that, you know, once it closes above, it usually fills the range up, right? It fills the range up, so you might not even get an entry. But if you do, I'm looking for buys potentially around 1970 areas to start retesting those highs, or even slightly lower. So like this, right? You came up, you broke above, grab liquidity towards these areas. This is a very nice area for buys. I'm going to look for around here. I'm understanding that there's a wick here, right? you rejected off this level, so there's a high chance the price can reject off this level, and a rejection here came up to those areas. Yeah, that's not bad. 1969. Look at these, right? You know, you rejected from here, came back up, and this, even if you just got into a buy around here, this move was like nearly 100 pips. It's massive range, massive ranges that we're in. Gonna move this up slightly to around here. It's just encompass for this, right? After you tap these areas, you came up to grab liquidity at 93. So 83. So cool. It's pretty simple, right? In terms of what we're looking for, but the nuances is what's important, right? We can't take a buy above a buy here when price is respecting 1974 currently on the 4 hour, right? On the 1 hour, you've probably, you know, you could say you're coming celery and whatever, but it's difficult because that 1 hour and the 4 hour, they don't really match up at the moment. Let's look at what the hourly did in terms of this, right? The hourly, I would say, closed above here, right? So in the case that you do close above, what happened, right? So here you closed above. Could you get a bottom wick towards these areas potentially? Bottom wicks towards these areas. It's just your next zone down, because you don't have that closure above. You need slightly more confirmation that it's going to go up, and I would say it's closer, like you're respecting here, right? So when was the last time you actually closed into this range? Closed into this range. Look at this, right? You closed into this range. If you got into a buy here, it'd be difficult. If you got into a buy here, also kind of difficult, right? So is it even down here? You respected here. Where else did you get a closure? You got kind of a closure above here. You drove up from here, buys around there. Closure, drive up. Okay, I would say my next area that I'm looking for a buy is probably around here. Understanding that to break out of this zone, we needed liquidity around here, right? You grab liquidity around here, you broke out and you started pushing up. Grab liquidity here to break out of the zone as well. I mean, you could even get buys at 69. Let me have a look. So what did price actually do? 4 hour, 30 is difficult. You could say it's potentially a fake out back into the range at 1974, but what does that look like? This has to be a very specific level if that is the actual fake out. Cool. Did it fake out above? It did. Okay, cool. I think in that case, I'm going to look for my first positions here. 69. Understanding that the hourly makes sense, the 4 hour is very bullish. If we do get a bottom wick, I'm looking at these areas, right? Closed above, you drove from here, you did grab liquidity here, so your stop loss anyways is going to be below like these levels. So it's going to be around like, I mean, I'd like to put it here. How big is this stop? Oh, okay. Yeah, I'll put it like below this candle here. I'm understanding that once you break below here, right, you at these sorts of areas here, you get a massive rejection. So if that happens, it's quite nice, right? So I'm going to put a stop loss around here. But manage to trade as you like, right? This is just a level that I think it will likely reject that as well. But my first buys are probably around here, even though we haven't grabbed any liquidity. So depends on how price prints, right? If it prints and it's like kind of ranging around here, right, ranging around 1973, 1974. If it's ranging above, then cool, I'll look for buys around 69. If it's ranging below, comes back down, ranges below, and I'll look for buys at 66. Yeah. By any given point, when price pushes up and fills the rest of the range at 83, I will need structure to form, right? What structure is that? Exactly what we're looking for here, right? So you've already tapped 83 in this case, right? So potentially looking for those buys first, right? You got those buys potentially around these areas. Once you tap 83, I won't take the trampoline because it's too bullish at the moment. But when you get range like this, right, you're rejecting, you're back into this range. Around 79 sorts of areas. Yeah, I'm going to move this down to here. So if you're starting ranging around, this is your range 1, your range 2, if you start ranging like this, get a push up and then you fake back in, right? Could look for a breakout to come back down, top wick, and start coming down. Or you could look for those wick entries to start coming down. Because overall on the 4 hour, I think you were respecting, right? You were closing bearish as well. So at any given point, this could just be liquidity, which it was, to come down. So these are my levels for today. Because we're so bullish, if price breaks above 88, I'm looking for the buys, right? I'm looking for potential 30-minute or 15-minute closures above, right? I don't know what the exact 5-minute range is for now, but these are the higher time frame closures that we're looking for. If you close above, I'll be looking for those buys above. And then your break-even point is 91. If you're looking for structure to be formed between 79, 83, or between 74 and 78, then I'll look for sells to come down, and I'll look for those buys towards around 69 first. If you're ranging around 74 to 79 and you come down first, my first buys are at 69. All right. If you get down to 66, sure, I'll take a pineapple, but I'm more looking to take go break even for combined break even, right? But if price just shoots down now, right, doesn't really create a range, I'll be looking for the buys first position at 66 instead of 69. Yeah, so quite a few scenarios, right? But they all have to make sense. The market structure needs to print. Currently, you've only had one bearish hourly candle for the last since like 1, 2, 3, 4, 5, 6 hours, right? So it's difficult to take a trade at the moment. I don't know what Asian's going to do, obviously, but I would say these levels are pretty key levels that you like. 83 will get tapped. Sorry, yeah, 83 will get tapped eventually. Just don't know when, right? But once it gets tapped, cool. We can start looking for what price is doing around these areas, and then look for that rejection or look for continuation to go up, right? And I would say a very key point. We mention this every single week, every single day, is that this analysis only applies for the next 4 hours. I would say maybe even the next like 1 or 2 hours, depending on how price opens up, right? Because every opening of Asian session could potentially have like a gap or some pretty strong push in either direction. So it's difficult, right? If price is moving away from these price points, and then suddenly you can't really trade these ranges anymore, right? For example, if you just suddenly drop, right? Suddenly you've already hit 96.6 within like the first couple of minutes, right? When price opens, then is that like, what can I do? I can't take a buy suddenly, because then you're very bearish, right? I'll need it to potentially trickle down, do something like this, right? And then close potentially bullish above like this, and then like something that's like a bullish candle that's respecting around 69, and then I'll look for the buys here, right? But if it just starts shooting down, it's so difficult. For example, like this shooting up, taking the sells was difficult. We took a sell towards these areas because we were looking for this 15 flip, right? 15 to flip, because you're closing bearish. Generally, you've rejected this place quite a few times. So we're looking for some sort of 10, 20 pips around here, but it just started pushing. So understand, because we lost in that trade already. So understand that because price is just pushing so bullish, to take a similar entry to what we did here in terms of like just a sell around here or a sell around these areas is not the best choice. But yeah, just understand that. Cool. Right, I'm gonna open up the Zoom, boys. Welcome everyone. Sup. Yo, so just start asking, just bomb me, yeah?
I'll have a quick one if I jump in.
Go for it.
So I took a buy earlier on today, and that's a sell. The sell didn't work out quite as well as I was hoping for. So it was the 3 p.m. candle on the 1 hour chart.
3 p.m. candle on the 1 hour chart. It's at 3 p.m. Yeah. So you're around here.
Yeah. So it was that closure back into the range.
You took this. You took the buys or the sells?
The sells when we closed back below that sort of minor resistance.
You closed. Where did you get the entry?
I got the entry around 1952.
1952.
Yeah, so that.
So at 3 p.m. So this candle here, I guess.
Yeah.
Okay. I'd be worried. I know you have no top wick on this candle, right? But generally, your 30 close respecting 52. Your 15, pretty sure it was closing respecting 52 as well, right? At these areas. I don't know when you got your entry, but it depends what your TP was. If your TP was literally like 50, then yeah, that's fine. But if you were looking to target more, I would say the general idea probably wouldn't have worked out, because your hourly also closed bearish but respecting after creating a massive bottom wick, breaking the previous lows, right? So at any given point, price could have just flipped.
It was that second bearish close. Yeah, that strong bearish candle.
This one, yeah, I know, but like
after that close, yeah.
Oh, it was after this close. You took a sell here at 4.
Yeah.
Right. Okay. I would still be worried. Basically, because we're understanding that once it closes, respecting, right, it needs to grab liquidity, right? Is this enough liquidity? We don't know, right? You didn't break a lot of these lows. You broke some lows, so you have probably enough liquidity to drive up, but then you needed more liquidity. So this turned out to be a liquidity grab, right? So understanding that this candle, even though it was like this at some point, any given point, this next candle could have created no bottom wick and just started going straight up, which it kind of did, right? There was not really a bottom wick for this candle. So if anything, I would have gotten out at least at 50, or like stops to break even quite aggressively on this one.
So is that basically because the previous candle closed respecting?
I would say the hourly, right? So the hourly closed respecting. The 30, I would say you got in at this candle here, right? So you broke below here, but your previous candle bearish was also respecting 51, 52, right? Even though you did close bearish, right? So you're still above this range. Your 15, I'm assuming you got in like these candles, like
it was about
what was the exact time?
4:07, I think.
4:07. 47 or 4:07?
4:07.
4:07. So you got in like this candle. Oh, you got in on the way up.
Yeah, on the way up, yeah.
Right, yeah, no, I wouldn't have taken that. Even though you're closing below here, it's dangerous because at the 4-hour candle, right, you're understanding that, this closed bullish, right? You're very bullish above. You're very, like, market trend currently is very bullish, right? And it's kind of just going to fill the monthly wicks, or the monthly range up to 83. So taking the sell here is risky. I'll, again, be break even as soon as you can. Did you get out break even or?
No, I didn't even have time to get out break even.
Yeah.
Drove, as soon as I entered it, just drove up straight away.
Yeah. Similar with the positions that we took, right? We took the positions, I think, somewhere here. I think Don got in at like what, 50, 56 or something? Something like that. Like around here or something. I got in at like 59, but then still got stopped out. I closed half my positions after the hourly, I think, closed bullet. No, not the hourly. The 30, I think. Closed, like once it started breaking above, I was like, okay, cool. There's a high chance that since you already had a bottom wick, right? Any given point, price could just start driving up. So yeah, I managed risk that way, but yeah, in terms of that trade, I would say it's difficult because your hourly, it looks very bullish. Like even though you came down, this is very easily a fake out, right? You've closed respecting, so any given point, if you do come and break back into the range, there's a high chance it's like a fake out to go back up, and the fake out is just liquidity ramp. Yeah.
Oh, okay.
Yeah, but you live and you learn, right? There's no worries.
Yeah,
we took a loss today, right? Like it's fine.
Yeah.
Cool.
Hello, can I ask you a question?
Oh yeah, of course.
I have like I thought about it when the guy asked you this, and I feel like the market was pretty bearish at this time.
The market was pretty bearish here.
Bullish. I mean bullish, like
yeah, pretty bullish. Yeah.
Before the candles developed, and I think if you go there for a sell, and the range was pretty bullish before, why not go for a range 2 breakout? Then you have like a confirmation it will go more bearish.
Yeah, so the only ways I could have got a sell, Tom, was it Tom that asked? Yeah, Tom, you asked, right?
Yeah.
So the only way I could have got a sell is if this happened, right? You know, you came down, you respect this candle, right? But then you came down, broke these lows. Cool. That's confirmation 1. Next confirmation is I wanted to respect 52 and then break these lows. Once this happens, I'll probably take the breakout to come down.
Okay.
Does that make sense?
Yeah.
That's like a celery, right?
That's basically a zucchini, actually.
A zucchini.
Yeah. A zucchini is just
Wouldn't he-
yeah, it's just another celery in range 2. But yeah,
Oh, okay, that makes sense.
Where can I find this setup? Because I'm always get confused, you know.
you can't.
When you say like onion, zucchini.
Oh,
and,
like so zucchini does not exist currently. Onion, breakout, fake out exists on Don's playbook. Liquidity.
Yeah, I know this, but what did I mean by that? Zucchini or pineapple? I don't get that.
So do you understand breakout, fake out, and onion then?
Yeah, I get that.
Okay, zucchini basically, like, it was something we implemented for like a short period of time, and then we quickly switched over to liquidity. But zucchini is basically a fake out. Like, if you have, let me try to draw it above here. Say like you have price like this, right? Say you're coming up, cool. You get a fake out below here, right? Come down, fill the range, right? And then you get this. There's 2 setups you could have taken here. Firstly is this is your range 1, right? On the lower time frame, this is a range. On the higher time frame, this is a wick, right? But then you're respecting. You came below. This is now your range 2, right? So the zucchini is when you get a closure back into range 2, a candle respecting, and you'd probably take the breakout here, right? Does that make sense? Targeting the next range down. This is just basically confirming that, cool, we're bearish for the short period, right? At least you're respecting, and if you do break these lows, there's a high chance that you're going to start either reversing or it needs to grab liquidity to start going up. But you can't take the sells here because you can't take you can't just take some random sells at like these sorts of areas, right? And when it first touches this, because yeah, exactly. So well, you need that extra confirmation of that celery. So that's the zucchini. Pineapple is just when we stack positions at like different price points. So for example, you got in a sell here, let's say a sell here, and then your stop loss was like up here or something, right? A pineapple could be like when you get in, when price reaches this point, you take another sell, and then you're looking for a break-even trade.
This pineapple is always like confuses me, like how you have like this big, you know, confirmation that price will be go down, and you know you are in a drawdown, you know.
Yeah, so it's not a confirmation or anything. It's just we're like the way we mark up our charts, right? So the levels that we put, it's a high chance that whenever it taps these levels, price will make some sort of decision, and it will like hover or it will reject for a little bit before doing anything. So we're just taking advantage of that. So for example, we take the buy here. If it doesn't work out and it starts coming down, cool, we'll look for a second entries here, which is about 35 pips away, right? So that if price does make a decision, right, for example, comes here, rejects, right, and then we're down to these areas, we're looking for this potential move where we can get out, break even for the first position, and also in profit for the second. Or if that doesn't work out, you can at least go break even in the middle here, so you lose 50% and you gain 50% here. Does that make sense? Yeah. Cool. Anybody else?
You basically want to.
Ooh.
Can I add
You
something?
can go.
Thank you for having me, by the way. I appreciate y'all doing this.
No, that's all good.
So look, I had a sell earlier, just since we're talking about sales, but I know I messed up I'm just trying to see where I messed up and how I could like
Yep.
prevent it from happening again.
Yeah.
So on the 5 minute, it was at 1955, like 1955.82 is where I got into a sell. Once it like broke the previous low and created that wick, I was thinking it would come down, and I had my take profit around 1950, thinking it would come all the way back there. But you see, it just wicked down and then came all the way up and stopped me up.
Yeah.
And then it ended up just coming back down again.
Yeah.
But
So
how do I base the?
did you
fake
get the
outside?
sell here, or did you get it on the way up?
Oh, let me see.
I took it on the
On the way down.
on the way down.
So you took it
yeah,
here.
that's the previous one. Yes, in the previous.
By the way, both positions are shit. I'll explain why. So this position, look at the time, right? 5:30. I'm pretty sure like this was news or something.
I think news were like at 6 p.m.
Was this one the news? At 6 p.m. It was this, right? Oh wait. I'm pretty sure
What
5 p.m. UK time, I'm pretty sure.
5:30 UK, right?
At 1850.
Yeah.
What time is that around?
This was exactly
It's-
5:30.
Yeah, you're right. Yeah.
Yeah. So news was exactly like right at this point. So taking a entry here, man, that is difficult, right? So this is your news candle, right? Cool. You push down. Did you go break even?
No, that doesn't look right on mine. Oh, look, I sold on the previous one, bro. You see, keep going.
You sold here.
Yes, that one. The one before the green doji, or that
You
one.
sold
Yeah,
here.
That I sold there, thinking it would come down. But then the next green one went down. I wanted my take profit to be around 1950. You see where it's
Okay. I
But
mean,
it
regardless
did not stop.
regardless of where your TP was, right? You should have gone break even once it passes here, because you're understanding there's no bottom wick for this candle. So once it creates that bottom wick and it breaks these lows, you're instantly break even, because at any given point it could flip and start going back up, right? Because we're so bullish, right? This could easily be a fake out on the 5 to start going back up, because you've created some sort of range here, right? Like here, top of range around here, right? You had some sort of celery going up. At any given point, this could drive up, which it did, right? It did also come back down to grab more liquidity before going up, but this position, if you're looking at it now, right, you had no bottom wick on this candle, right? It just pushed up. Any given point, it could start pushing up, like similar to these, right, where you basically had no bottom wick, no bottom wick, no bottom wick, and it just started driving up. So the next time you get into this position, once it breaks these lows and you see that the previous 5 has no bottom wick, I'd go break even once it breaks, firstly. Secondly, this was pretty close to news, man. Like, it's about 40 minutes away from news, which is still relatively close, right? If you're holding a trade, like if it goes into drawdown for a while, it's likely you're going to hold it for, I don't know, half an hour, 40 minutes, right? If it's in drawdown. So if that happens and the news hits, oof, you don't know where it's going to go, right? Especially with the kind of
I
speech
got
stuff.
stopped out. I was kind of upset. I only did that because at work I usually try to like put my stop loss and take profit, put my phone aside and then check it. And yeah, today just ended up getting stop loss. I was kind of upset.
Yeah. Well, there's no need to be upset. I mean, like, stop loss happens, TP happens, right?
But I'm learning from it, so
Yeah, it's
at
all
least
good.
it wasn't a loss.
Yeah, of course. But yeah, I would say that was the position. Like, I'm glad you didn't get in right at news though. Like, this would have been an even worse position. And then getting in here is a very bad position, because you've just had this massive rejection here, right? You've tapped you filled the entire range, firstly, right? So it just needs to make a decision here, and the decision it made was flipping bullish. You didn't get a breakout, you closed bullish, right? And I would say, like, you closed bullish respecting this range here around like 54. I'm sure there's there's some range around here. If you're closing bullish respecting that and you haven't broken all of that, it's difficult. Like, until you break below here, like 50s, I can't take a sell. Because you also, in the short term, you've broken above these highs, right? Came up to these highs. So yeah, but I would say, yeah, that's the position. Who else was asking? Yeah, so
I would
Connor.
say also, before you put your phone away, wouldn't you kind of want to just wait to see if it goes to break even, then move your stops to break even, and then put your phone down and see if it hits take profit level? That would kind of be more ideal, I would assume, right?
Yeah, I guess it's just he didn't move it to break even after it kind of broke the low, so it's difficult. I guess like there's different ways of trading, right? Some people literally just set stop loss and TP and just leave it, and it works for a lot of people as well. So yeah.
I did want to ask. I had a level at 1963, and Dawn had to buy at 1967 today. I would have thought that 1963 would have been a pretty good buy because in my eyes, I'm seeing it as like a technically range 2, and then what happened was there's also no bearish candles before it broke that range. So I'm trying to understand why those buys at 1963 wouldn't have been valid towards even 1967.
To answer your question, we're gonna have to go. I would say, when did you get into the buy? You got in after this week, after this candle, right?
I didn't actually get in.
Oh, okay.
Because I saw it play out. So I was like, why would? I just wanted to see why that wasn't really the technical way to do it based on your guys' theory.
I would say, your for example, your 30 close no top wick, right? Your hourly close no top wick, right? Just things like this. You close no top wick, and you're also like respecting this wick here, 1962. So you haven't broken out of the range. Taking those buys are difficult, right? Unless you're looking on the very small time frame, and then like, oh, cool. After this, the 15 also didn't break out of the range, right? You're still respecting 62. This wick is still a range on the lower time frames, right? But once you got this candle, which pushed really aggressively, I would say. I don't know what it looked like on the 5. Where is it? 63. So here, right? Like this, it was respecting 63, respecting whatever. Broke out. I would say you probably could have gotten into buys around here once it broke these highs, and your stop loss would probably be below here. That would have been fine, I would say. And your advantage point, I would say, maybe this wick here, right? For about 8 pips, 9 pips. Yeah, that would have been fine. I would have I don't know if I would have looked for a bottom wick, because it was driving pretty aggressively. But oh, this is the 1 minute.
Yeah.
But yeah, like I would say in general, it's not a bad buy. You would have to, like, for example, like you only have range and structure on the 1, right? That's when I would use the 1. But on the 5, like it doesn't, like, you couldn't get in here because you closed respecting 63, and the next candle filled 67, right? Yeah. But I would the buys definitely made sense. I was actually considering not getting into Don's trade just because. I was actually looking for a buy around here. I was looking for the breakout here.
Yeah.
So the breakout here, right when it broke this candle, expecting that this was a liquidity grab, right? And after news, if it was going to push up, it's going to push, right? And if it does push, it could start retesting those highs towards 62. And my break even was around like 10 pips, and I got hit break even. So. I was quite bullish for the day, and then I suddenly got a sell signal. I was like, cool, sells.
Yeah.
Do you journal that?
Did I journal what?
Like, do you journal when you feel like you were when you had a bias like that, like, and then Don sends a trade, and then you take his trade?
Well, I just journal because I have a section for bias as well. My bias was bullish. I took a sell trade. It didn't work out, and then like the rest, like. By filling in the journal, that's the entry, right? I now have a record of why that didn't work.
Yeah.
But yeah, Tom, I would say. Oh no, it wasn't Tom. It was Connor. Yeah, I would say Connor. Like that was a great one. Like the buys all the way up were clean. Potentially, like once it broke this as well with this massive top wick, even though you could see this as a rejection, you could have a very tight stop loss, right? If you wanted to, you could have like buy it off the flip, stop loss around 14 pips, and then just target the wick fill, which it eventually hit, right? But it's just kind of, if you had a level towards 66, which we've marked up for buys, right? This was you know, you closed above, you have a top wick, even though you filled the range. So you could, you know, because we were so bullish. Yeah.
That makes sense. Yeah, I did end up getting in a buy at 1970.
Yeah.
To 71. It just hit my TP.
Nice.
But I was just scared the more we went up that we would like, then there's more of an opportunity for like a liquidity grab to happen.
Yeah.
So I would.
What I've been
63
noticing,
or 66.
yeah, what I've been noticing is, like, for example, if you want, once price push, like, I'm gonna just draw some ranges, right? Like, say price pushes up, like you're in a range here, whatever, and then you suddenly get a push above like 2 ranges. Once you get a breakout here, you might get like a tiny thing here, or like no bottom wick, and then you'll typically fill the next range with a wick to go up as well, right? But then your wick will probably respect, your candle closure will probably respect here, and this, in some sense, a lot of the times you'll see this as like a confirmation that, okay, it's stopping, right? And this is the kind of liquidity to come back into this range, and then you start ranging here. So
that makes sense.
Yeah, you see a lot of this happen, right? Let's have a look, right? Let's just see where that happens. Look at this.
Happened today.
It happened there, right? Happened there. What else did it happen? It happened here, right? You had this push up, right? Came up, wick, massive wick, and then you started ranging in this area, right? You had this push up, and then you started ranging below. Like, it's just, that's what I've been noticing a lot. Like with this as well, right? You wick up and you start ranging in these areas. So even if you took a buy here, right, it's difficult because you don't know if it's going to come back. But taking a sell, it's even harder, I would say, because you don't know if it's going to push up.
Yeah.
So days like that, go with the bias, but look at your key levels as well, because these are key levels getting tapped, right? We haven't tapped into 79.83 yet, so I'm expecting at some point this to tap. I just don't know when. Yeah. Look at this, like 30 opened up, no bottom wick, no top wick, right? First thing it did, came down, creating a bottom wick. Don't know, if this does flip, maybe you'll see a continuation up to 79. But if not, you might see a range below and then just start doing that. But yeah.
Thank you.
Yeah, no worries, no worries. Anybody else have questions on the Zoom? If not, I'll defer to chat.
Yeah, I've got a quick one.
Yes, up Tom.
So sort of get the difference between the wicks after a closure and like, where the move drives from. But how do you use them differently when you're looking at levels?
Or what do you mean, how do I use them differently?
So like you mentioned during the analysis, you said like the drive started here and then you push, compared to when you get a closure above and then the wicks to continue the move.
The wicks to continue the move. I don't think I understand your question enough. Do you, like, is it gonna help if you draw it out?
Yeah.
Do you want to try annotating on these 4 levels?
Maybe you're trying to say what's the difference between like when we're grabbing, what's the difference between when we're using the wig to grab liquidity and then like when we're breaking out.
Is that what you're asking?
I'm not sure, but like, let's say we started here and we just like pushed and we got like a closure above this range, for example. Yeah. You sort of say like, oh, how, you know, this could be a level because we drove from here. Whereas let's say we got a closure above and then like we came whipped here.
Yeah.
And then this would also be a key level if we had like previous wicks like these.
Yeah. Oh, okay. I see what you mean. Yeah. Okay. So typically, what you'll see, right, is, for example, let's say price is pushing up above this range, right? Get a closure above, right? Now let's say for drawing purposes, let's say you get a closure above here, right? Cool. You get a closure above here, but then it starts ranging. Let's say it just starts ranging. You close above, but you're respecting, and then you kind of create, you know, other candles. You're kind of like let's say you get a fake out as well, right? Sorry, like a very say you get a fake out, right, and then you potentially do something like this, right? At this point, and then if you do get like a bearish closure like this, I would say you're very much in this range. You haven't broken out, you haven't done anything, right? At that point, I would be looking left. I'd be, okay, cool. In the past, when price wanted to drive up to break this resistance, where did it tap before going up, right? So when we do get the eventual breakout, there's two scenarios here. One is you can be looking for which price level tapped for us to be able. So for example, let's say it's a bullish candle, right? What area did we tap, like these levels or whatever, before we were able to take a break, before we were able to have enough liquidity to break out? That's number one, right? Number two is, where did we tap after we had a breakout? So say this candle didn't happen and we just broke out, right? Where did we tap in terms of our candle, right, into whatever levels before we were able to go up, right? And usually I would say your candle, when you get a breakout, your wick is lower. Is slightly higher. So you're not tapping as much liquidity because you already have enough volume indicating a breakout, right? So you're not looking to grab as much liquidity, but to break out of the range, you also need volume. So you need volume to break out of the range plus push up, whereas this one, you've already broke out of the range, so you only need the liquidity to push. Does that make sense?
Yeah.
And then you're just looking left to see, like, okay, last time you were in between like 2013 and 2018, where did you tap before you were able to do that?
Right, yeah. Yeah, so I sort of focus on the second one, so I sort of look at the closure and then look where the wicks are. I don't really look at the first one, but that makes total sense. Thank you.
Yeah, sounds good. Generally though, like, I would say when you look at price, there's so many levels that need to get tapped before anything happens. Like, for example, if we just go to the 4, right? There was a period in price where, like, it was this area. I'm just going to go to the hourly actually. There's a period when we were literally just ranging like this area, right? You just see every single time price wanted to go anywhere, it basically tapped into 1930 something here, right? 1939. Every single time it made a decision at 1939, right? Like, wherever you went, okay, cool, you came up here, was this enough liquidity? No. Grab liquidity around here, you didn't push up, so cool, we're looking for more liquidity to break out of this range, right? To break out of this range, we needed liquidity here. Broke out, grab. Now that we have the breakout, right, less liquidity needed for us to continue, right? For example, here, right, you pushed up to here, you're ranging here, not enough liquidity to break out of this range, so you grabbed it slightly lower, you started pushing up, right?
Yeah.
And like, it's just these are why we look at key levels, because this level got tapped 1, 2, 3, 4, like so many times, tens of times, right? So these levels are valid for like ages. I would say they're still valid now because we're trading based on them.
Can I ask a question to this topic?
Yeah, of course.
Can you go back where you was right now?
I can. So 1939, these areas. Yeah.
When yet you have price go, it's like in a bearish, and then typically, like you said, when we have like a strong support area, and if price wanna go up, it usually breaks the support to grab liquidity and goes up.
So you're saying when we're bearish, are you looking for sells or are you looking for price to go down or go up?
I mean, like, it's like on the topic what the other guy asked me. Like he said, when price want to move up, usually build like bottom bottom wick
Yeah.
and then go for up. Like the bottom wick is for the liquidity gap.
Yeah.
Then if you see that, you see it broke the support,
Yeah.
it went down, and now it's ranging, and it's like breaking structure to the upside. Would you go for a buy on the strong support?
Oh, so like for example here, right? We're ranging. Would I buy here?
Yeah. Yeah. What would you do?
Yeah. So for example, I see a level here, right? Around 1933, right? You see something here. Obviously, we might not have had the data previously, but I understand that there's probably some level at 1933. Look at this, right? 1933 is a pretty strong level. I would have probably taken a buy at 1933 after I'm seeing that. Cool, you're closing respecting, you faked out back into 1943 up to here, and you're looking like you're still respecting this area, right? After that, it just strong push down. I'm looking for this to be a liquidity grab, right? Because you also, after all of this, right, you tried breaking the low so many times, but you failed. So many times that you failed, right? Indicating that you probably don't want to go down, right? But you also don't have enough liquidity to go up. So we need to grab that liquidity to go up. And this is what this is. So I would be looking for the buy around 33, yeah, for sure. And then if you didn't catch this position, you probably could have caught it when you came back. So for example, it closed above here, 43 again, bottom wick. You could have caught the bottom wick, or you could have caught the breakout. There's three ways you could have caught the move.
Would your ideal entry be on the second bullish candle when it flips, or the first bullish candle when that flips after the wick, or what would your preferred entry be on that buy then?
I would say the highest confirmation would be this wick here, because you're closing above this range now, right? No, actually, I would say there was no ideal buy here. For me, I would say my best buy is if this bullish candle closed above this range.
Oh, okay.
Right? If it closed above and then you got a bottom wick tapping into these areas, cool, I would be looking for this bottom wick and just start driving up. Because I'm understanding that if you've closed below here, you still could drive down. Yeah? Which is why we take the wick entries here, because if it wants to continue driving down here, then it will still, it'll come down, come back to retest, grab liquidity before you're able to come down, right? So we can get out at break even, or if anything, most likely it will have some sort of rejection towards around 39 levels, and you can get out there. Yeah, does that kind of make sense?
So you would have tried to enter around between 1932 and 1933 after the flip. I mean, after the wick is formed.
No, I'd be first entry. It would be like this, likely. If not, so that there would be two positions potentially, right? Let's try to zoom in on I don't know. Do I have enough candles? Ooh, it's close. Oh, we do. Oh, fantastic. Yeah, man. I had to buy Zoom a premium as well. But look at this, right? So for example, let's say you got into a buy here. This would be my trampoline buy, right? And my trampoline buy, I wouldn't take all the way up to this range. I'm understanding that, it's just a quick rejection. I usually take it, I'm seeing every single time trampolines happen, it's around 28 pips. 25 to 28. So I might even start putting this, just setting these up as I sleep. I'm not gonna lie. But it's difficult because look, if I put a buy stop here or buy limit here, I was a little bit away, right? And if this didn't activate the first time, then the trade ID is already gone, right? But so this would be my first buy. My second buy would be second buy. I couldn't have taken this. You didn't break above, right? If you broke above here, bottom wick here, cool, I could have taken that. If you broke above here after, so if you're looking at this, right, generally, let me just get rid of this. Generally, you have, I'm going to discount this as a thing. You have your range 1, range 2, right? I'm looking for those range 2s buys above here, breakouts potentially, but bottom wick would be preferred. And in this case, you close no bottom wick, no top wick on the 15. If this had a top wick on the 15, I'd be out. I'd be in very, very like with a lot of confidence.
Okay.
Yeah.
That
Yeah.
makes more sense, I guess.
Yeah. Cool. I'm gonna answer some questions on the chat. I think Don1 had a question. Candle at 66 open to half. Open to half first before driving out came. There wasn't no pull first. Candle at 66. This one. Yeah, we didn't really get any liquidity grabs here because I guess this was the liquidity grab. You ranged, you grabbed liquidity twice here, you also kind of came down, broke all these lows. I guess this wasn't the liquidity grab. But yeah, I wasn't on the charts to look at this, I just kind of took Don's sells blindly. But like for example this, I would have seen potentially 15 closed respecting, even though it was bearish, right? Grabbing liquidity. So if you combine these two candles, right, what do you get? You just get one candle that has a bottom wick, very steep bottom wick to start driving up. So yeah, I would be careful if that happened again. But it's just like we were expecting, because you kind of played around in this range quite a lot. Any given point, price could have started driving down, and that's what we were trying to take. I would have taken this again. But yeah. Cool guys, I think I'm going to end it here. No streams tomorrow, right? Because it's a Friday and there's no markets on Saturday. So we'll be back on Monday for the free streams. Oh, can you speak louder or closer to your microphone? Because I can't really hear you.
Can I ask the last question?
Yeah.
Okay, my last question was, I see many DVS members like Hus and other guys always like talking about like weak entries.
Yeah.
I know like the slip, you know.
Yeah. So you just want to know what a wick entry is?
Yeah, I know, but are there more than just like normal wick fill?
Not really. There's a celery play, which I think you'll know. There is the wick entry, which is relatively new. There's the flip, which you also know. And then there's also like break of current high or low, which you also should know.
Break of current high. I don't know that.
So for example, if you get like a breakout, right? For example...
Is that on the playbook or?
Yeah. For example, you
Okay.
get like a breakout here with the top wick, right? You could be looking for a position here. This is the break of the previous high or low. So you've broken the previous high to start going up. So if your candle generally was opening up like this, bottom wick, and then once it breaks this high, you're in the position, right? So your position for here would be from here. Break of so the flip would be here. Alright. Break of current high or low is just for example, break of current high or low is like if you had a bullish closure like this. It's just this next candle, if it's just driving really aggressively, right, with no bottom wick, and it's pushing up, maybe like this is 1 minute into the 5 minute candle, you just have like a buy stop here as it's coming down, retracing a bit. But then once it starts breaking this, then your whole candle, then your entire candle at the end of it would look like this, if that makes sense.
On the 5 minutes.
Yeah. So for example, previously this was like, this is your 5 minute candle, and this is like what the first minute of the next 5 minute candle looks like. So it's already pushed up, right? And then it's retracing a bit, and then you put a buy stop here for when it re-breaks its own high. That's the break of the current high or low. But yeah.
But like, is it like on a naked level or just like?
No, that's just the
when
entry
like-
type, right? It doesn't matter. The setup is the breakout or the whatever, but the entry type is how you entered based on the wicks and the closures.
Okay, but if I can like always, if I always like take the same breakup, like break of previous high of the candle, is that possible? Or should I always adjust the entry?
You can. I mean, like for different setups, I would say you have different ways of entering, and play around with it to see what you're most comfortable with and what works for you.
Okay.
It's very dependent on your trading style, I would say. But these are just different ways you can, like, it's just one more confirmation. Like for example, if it breaks the previous high, right, you're gonna create a next higher high, right? If you're looking for the current breaker higher lows, it's just a more aggressive looking for the higher high. So stuff like that.
Okay.
Yeah, no worries. But yeah, guys, I think I'm gonna end it here. It's been I'm not gonna delete this. I'm gonna take a screenshot for the chat later. But yeah, GG's. Thanks for everybody who joined.
Thank you.
Yeah, no worries, guys. Thanks for joining up.
Thanks very much, Elvis. Have a good weekend.
Yeah, you too, guys. Don't worry about the loss, right? Just come back to the streams tomorrow. We're gonna take a massive win tomorrow, or we're gonna get no trades tomorrow, or we're gonna take another loss tomorrow, right? But as long as you have an account to trade, that's the most important.
Yeah, exactly.
Yeah. Cool. Well, thank you very much, guys. I will see you guys on Sunday for the Zoom guys. I will see you guys on Sunday for a private session, and then Monday to Thursday is the same as every other day. But yeah, cool.
Yeah.
See you guys.